Tuesday. Welcome back just after 3 p.m. Final hour session. Support is breaking. It's really not that hard to see it. I had the same trend line for the last couple of weeks. We talked about the July 31st high in the SPX. We talked about the August 1st low. We drew a trend line off those slightly higher highs, got to those all-time highs last week after CPI on Tuesday, poked the highs on a gap higher Wednesday. The market's been sideways, started to finally roll over. Today, we're seeing a dump of about 0.8 to 0.9% from high to low. Here's a pretty easy chart. This is what I had posted. I posted this to Telegram. I shared this in the live sessions. Said, watch support, watch support, watch support. We went on the right-hand side of the trend line. What are we doing today? We're rolling over. We're back down below the July 31st high. This gives the market a chance to correct. Is it going to be every single day now? We just rolling over and just falling every single day? I don't know. Maybe not. There's the high from last week. There's the low from last week. I would say if the market is going to find support, it better find it before we breach this low around 63.60 or so. This level support's around 63.64. If we're going to continue to fall, if it takes out this low, chances are we breach the low and we do not come back above these. Okay, so let's see what happens. Tomorrow's a new day. I have a couple things that I need for right now. For today, I need to see if price will stay. And it's probably not going to be the case. I'm risking about $400 below 64.20. So if price is below 64.20, I'm going to lose $400. Okay. I made $30 or $35 earlier, so it's going to be a little reduction of that, but not much. If we go back up to 64.15 or 16 or 17 or 18, then that little recovery would allow me to mitigate some of that risk. If we're greater than 64.20 at the end of the day, I'm going to keep about $95. So we'll see how the trade plays out. I'm also watching to see if I get a stronger bounce off the 6,400 zone, which is right here. I call the potential low on the day. The VIX is up to 1581, which is just around a 1% move. I call the 63.90 to 63.85. Okay, so we're up here towards 64.56 in the highs. The market's already pushed. I'm going to move this up a little bit. From high to low on the day, the market's pushed about 0.8 plus percent. That's gone about 0.87. Okay, I could see us maybe poking 64 and then going back up. So what I'm trying to do here, and I posted this in my daily profit play, is I've got a trade offering about 360 right now, 355 right now, but I need price to stay above. This break even would be around 64.07 or 64.06 and change. So I'm trying to get this thing filled for $4, which is getting closer. If it gets filled for $4, I have $1 risk for potential $4 profit. And this trade may be looking at the same type of thing if we dip a little bit below 6,400. Let me see. So I would be, and here's the deal. I would be settling for this trade if we don't bounce off the lows. There is still risk. So I could take the trade and be happy. Hey, man, I'm only risking $1. Well, if price is below 64.05 by the close today, I'm still risking $1. So just throwing on a trade and getting 365 credit means I'm still risking $1 and change. Right? So let's see what it does. I mean, this is $5 right now. It's about $9 away from my sell strike. But I'm just trying to get a high fill and see if the 6,400 offers like a 5 or 10 point bounce. Okay. So we're at 370 right now. I'm trying to get this one filled for $12, which would be a 15 wide, trying to get filled for $12. Maybe that offers a small profit as well. These are the trades I'm taking to the close today. The 6,400 by 63.95 is trading for about $1.35. That would give me a decent break even of around 64. It'd be 63.50 or so, 63. What's my number? 63.98. Maybe I don't know. It's just higher risk than I want. So I'm hoping that the market give me a stab, give me a $4 fill, bounce up to 05 or bounce up to 10, and see if we can get the market to respond today. We came into the market thinking about a 20 to 22 point move on the market maker side. That'd be from this previous day's close. We've gone way beyond that. We've had like a 2 to 3 times market maker move today. So from the close yesterday, we've gone about 50 points. That's more than double what the market makers had in store for the day. If you go intraday price action, the market was up around 8 points, has fallen around 50 points. So it'd be nice to see a little bit of slingshot off these lows with this huge level at 64. I just don't want to see price pin at 64 by the end of the day. That would be super annoying. So it can happen. It would be the scenario that I had last week, which, the difference this week is, let's say we close at the lows and we just stay at the lows all day. I'm going to lose about $400. Last week I lost like $1,200. So I clawed back for the rest of the week. I ended up finishing the week $300 positive. This week I'm already up like close to $600. So I'm giving back a little bit. I'll just keep grinding for the rest of the week. It's not, it's just trading. But I'm hoping that it'd be nice to get like one trade to fill me without taking on a stupid amount of risk. So, at this point we have 40 minutes left before the close. I might as well cheer on a dip to 6,400. I might as well cheer on a dip to 63.99 or 98 and then see if the market can do this. Let's see if we can dip. If we can dip below 64 and then push back up to like 6405 or 6410 to close out the day. That would be like a strong way to kind of finish the day. If we don't, okay, fine. I'll lose potentially, a couple dollars. All right. So we'll see. Just finish up a waterfall income class. We had a great session day one. We're doing a 3-day workshop this week for waterfall income. Took some notes. I'm going to put together a little like strategy guide PDF for this week's classes. So right in here, day one, just sharing some notes with traders. We'll do this for day 1, 2, and 3. We talked all core strategy today. Tomorrow we're doing a little bit more advanced, breaking it down, deconstructing, start to finish. We have 8 open positions running in waterfall income. And should be fun. Should be another like strong day. We're doing the live masterclass at 1:30 p.m. tomorrow. Okay, what else is going on? We'll go advanced decline line for the day. Where are we at? Let's go heat map. We have 60% of stocks declining. A lot of it's led by tech. AVGO is down, Nvidia is down, Tesla's down, Amazon's down, Home Depot had good earnings, but it didn't do enough. I think the Dow poked highs recently, but that's it. Look at all this. You've got some tech that's down. This is a pretty interesting rotation, right? Oracle, Palantir down at 9.5%. Wow, that's a big red day for Palantir. Palo Alto, did they have earnings? I think they did. They probably faded most of that. If I'm seeing that's positive, we probably had a big push to the upside. Oh yeah, so they gapped up to about 190, and then they've been fading all day. So, it's fine. It's an earnings play. That's why they're showing green, but it's still like red price action for the day. What else? Palantir down, Fortinet down, Microsoft down, Nvidia down 3+%, AVGO. So mostly red, 60+% of stocks declining today. Boeing is down, Netflix down, Meta down, Tesla, Amazon, Google, some big hitters, large market cap. That's your broader market. S&P, if you got your major market caps down, 60+% of stocks declining, you can imagine, the market's down for the day. And there's my freaking credit just slipping out of my fingers right now because we're not filling. Come on. Give me $4. Where's my other trade? 4.95. That was, dadgummit. We'll see. I might just have to take the original daily profit play risk, and that's going to be like the trade loss for the day. I'm just not going to settle for like a mediocre fill. And maybe we get lucky. Maybe by the end of the day, we get lucky. This thing's back up to 20. I'll move this chart alarm here. Somehow we hit it. I can just, even if I walk away with a little bit of risk, truly, I'd be happy between like maybe 64, 16, 17, 18, 19. I'm washing away some of my risk. I'll put a 19 here and see if we get a little rally here for the last 40 minutes or so. Okay. Why is Nvidia down? Technically it's down because it should be down. It's overbought with divergence. We haven't had a single pullback. This thing's up 112% from the April lows. I just think it needs to happen. Like a summer lull, little pullback, maybe some profit taking, jack. Who cares? It's down because it should be down technically. The why, does it say anything? Price targets raised to $240. Expecting revenue. We got earnings next week on Nvidia. Look, if it's a bit of a pullback, let's say that we decline into earnings. Well, what do you think earnings is going to give us? If it gaps lower, I'm sure it's going to be a great gap fill trade. And if it slides lower into earnings, we could also have the thing pop right back up to all-time highs on positive earnings. So I think this is a bit of a, kind of a market manipulation move. we should at least see a pullback here, right? There's 23%, there's 30%, there's 38%. These are all fantastic levels to be looking to buy NVIDIA and then take it back up to the highs. So a little rollover is not a bad thing. Okay. So, I mean, it's down, but look at the previous highs. It's at 153. You look at just a simple fib from low to high. I think this market should be pulling back to like 160 or 155. So I kind of would like to see it, but obviously if NVIDIA tumbles for a little decline, I mean, if this pulls back from the highs at 180, that's a 12, 13% correction. That's a 16% correction. That's a 20% correction. Is that going to scare the pants off the market for a couple of weeks? Maybe. But I think it's an opportunity to buy the dips. I really do. Or position for its higher volatility, sell some more premium, sell some freaking puts. You know, I mean, if I've got price in here on NVIDIA and I could sell puts at like 100 or 90 or 80, I'll take that trade all day. Okay. I've got some trades running on NVIDIA right now. I sold some puts. I've got some ratio spreads. Let me see what I have here. I know I did a ratio spread in my profit panel session. I did this the last couple of weeks, I think. Let me show you here. So NVIDIA is, I've got the shares, I've got them covered. This is the covered call out to the end of this month. I'm going to roll this again. That's fine. I'll roll it for more income. It's in the money. I'm just going to try to keep collecting some income on it. I don't want to sell it. I don't want to buy puts any longer. I do have like a big put out here that's just like way out of the money in case this thing just dumps. But this is the project options edge trades that I put in. I bought a 150, I sold a 140, and I sold a 130. So essentially, I'm on the hook for owning shares at 140 and 130, but I did this trade for almost $500. So the probability of profit going out to January right now, probability of profit on this trade is I have about a 83% chance that this trade is going to be fine. I also have a profit trap of $1,000. So this trade potentially could pay me a profit trap of $1,000 on top of the $495 credit, and I never have to own the shares of NVIDIA. So right now, like it's down about $100. Okay. But price has to fall all the way to 140 for me to take on any real risk in this trade. If it's 130, I'm potentially taking on 200 shares of risk. Okay. And if we're down to 130, NVIDIA has been, a great ride, but holy crap, that thing would be super disappointing. If we're down to 140, this thing's down 23%. We're down to 130, this thing's down 30%. The largest stock in the world market cap wise would be just shedding, I don't know, probably close to $500 billion in market cap, maybe more. That would be extremely disappointing given this like AI growth and this AI optimism, this AI everything. NVIDIA still has like a monster moat. So I think it's a good income trade, and it kind of gives me the room to cushion this decline and hopefully see some juicier premiums to sell. And if we fall lower, I will probably do a similar trade and just go further out of the money and do like the 100 levels and maybe take it back down to these April lows. Okay. But anyway, going into next week, I'm just going to sell more calls. So we're at 6406 SPX. I'd like to see a move back to like 15 or 20. That might be wishful thinking. I'm not getting my fill where I want on SPX today, which is disappointing. I was close. I think I had it straighten up to like 370. Now it's at 280. Gosh. Just don't sit at 6,400 all day. Like, come on, use a floor, bounce off the floor. Just a little frustrating on 0DT when it's like, if the market, it sits at the floor and stays on the floor, it doesn't help my trade. If it sits at the ceiling and stays at the ceiling, it doesn't help my trade. So I'm looking for a little reflexive bounce here, maybe to 10, 15 or so. 15 or higher would be great because I could reduce my risk on the trades that I have running right now to the close. But that 6,400 like has been hit. Now the question is, are we going to stay there for the day? Or are we going to pop up here maybe 10, 15 points? We'll find out in about 32 minutes. Okay. But I did say that we'd have a bottom around 6090. The low today is around 6,400. Not saying it's perfect, but we haven't breached my low. If I'm selling premium, I don't mind like getting these trades where it's like, I want these trades to get filled for some credit. Anything happened on the put side here? No, they offer no credit. This trade's still offering $4. It's a break even of 6405. Fudge, man. This thing is up like $7 to $8. I just missed it. I wasn't going to settle it. I mean, I was going to take like $10, $11, $12 of credit. It just didn't offer me enough. Same thing here. So I'm not settling for garbage. I just think it's silly to do that. So we still got 30 minutes. Maybe I can toss in a late trade, but I'm also like, if I lose today, like I'll be down about $370. That's pretty easy to make up in a couple of days. So anyway, if we get a bounce up here, I've got the chart alarm set at 19. What's this trade? 64.19. I might as well set it at 20. And if we're back above 20, then I get lucky and have zero risk, and I can make about another $100 on the day. So perhaps the market gives us a nice little surprise. It was a little shocking to see it be so one directional today. And maybe at the very, very end, market makers decide they're going to make a little surge move these last 30 minutes. So time will tell. All right, what else? I saw somebody asking about Ethereum. Somebody asked about gold. Let's have a look at both of those. So gold. I sent out a video today for my Pulver alerts. Gold I still like a lot. It's nice to see that gold is actually, again, it's sideways. There's not really an incredible amount of awesomeness in gold outside of sell puts. I'm selling puts on GLD. Okay, here's what I'm watching on gold. I will get into more gold futures. If we have a dip to the 144, let me change this color. If we have a dip to the 144 or the 200 moving average, I'm going to create a gold futures trade that gets me back up to these highs. It would be low risk and it would be all reward, and all price has to do is stay above this level and I can make whatever my profit target is. So I'm going to try to set it up for a 1-to-1 or better. All right. But I want to see a price will find either the 144 or the 200 moving average. We have been away from this for a long, long, long time, like crazy long time. We haven't had a 200 EMA test since October of 2023. That's almost going on to 2 years. And that is 461. The only bar count that I've seen that's been higher than that was literally a stretch back from 2009 to 2011, like during the Great Financial Crisis when we hit a bottom. Gold stretched like 600 bars and had like a 30% correction. So, I was basically, I did one trade where I sold gold. It was up here. When gold hit, like it would have been GLD around the 310 handle. It would have been XAU around 3,500. I did a gold futures trade and we're trading around 35 and change. I did like a 36.25, 36.50 up here. And it was like a $250 to $300 winner. But that trade closed out within about 30 days. So prices continue to stay sideways on gold futures. All I'm doing on gold is selling a bunch of puts. I sold the 280, the 275, the 270. I've got ratio spreads, the 284 by 280. I am willing to own more GLD at this level. But if the market is just going to go sideways, I think that the posturing of gold is still very strong. I think this, if we are lucky as like a bull here, if we're lucky, I could see gold doing something like this. Okay. Now, this could all be invalidated if this wedge breaks to the downside, because this is an ascending wedge. So we have equal highs and we have higher lows. If price bounces here around 32.60 and goes back up, then it's more of a horizontal channel to trade. Okay. But what would be exciting is if we break the highs and we go higher, this thing has room to run to 4,000. This thing has room to run, game theory style to 5,000. This is really just an anti-dollar trade. If gold goes higher, it's higher inflation, more yield. It's trading like an asset. It's scarcity. It's harder to get more gold, blah, blah, blah. It's just like the globe wants gold. The world wants gold versus the world wants dollars. Make sense? So anyway, I like gold. I think that it's pretty solid. I'm just selling puts and I'm just being patient, which is the hardest thing, because I think that, medium term, longer term, I'm going to be bullish on gold and we're going to get another run. But I just don't want to see me buying highs and have the market dip 10, 15% when I can just wait for a better technical setup. So if that technical setup is pulling back to my 144, 200 moving average, I'm going to start positioning for those dips to buy. Silver, same thing, lots of dynamic support. If we fall into this dynamic support, I'm looking to buy some silver, take it back up to fresh highs. All-time highs around $49 to $50 spot price. Silver to me is a great trade up to those all-time highs, possibly higher. Bitcoin, we're all the way down from 124 when I just saw, it was so funny watching this on Twitter. Right? Twitter, X, all-time highs, let's go. Now the market's down 10+%. Okay, market's down 9% on Bitcoin. Well, I still think it's dynamic. Find some support here. See if it closes below, closes above. Nice entry, stop loss below. Go after higher highs. It's just a build-up trade, right? Unless the NASDAQ is going to roll over, unless the S&P is going to roll over in a hard way and we all of a sudden are facing like a crazy correction. Look, the market's down like 0.5%. You know, I mean, my God, Bitcoin, it's like, just relax. Like this market's sitting at all time. You've got all-time highs S&P, all-time high NASDAQ. You got all-time high Dow. Russell's playing catch up and outperforming. It was up 6% for the month of August until, this week. Bitcoin's up to all-time highs. It's like the market can pull back. It should pull back. It should offer buying opportunities. But people just lose their minds when it's like, I bought Bitcoin at 123. Why is it pulling back? I'm down 9%. I don't know how to trade. Just relax. If it pulls back into some dynamic support, look for dynamic support to then close below, close above, and then try to get to all-time highs. Use defined risk. If we're down here, draw an aggressive trend line. If we get on the right-hand side of the trend line, you can buy it, stop loss there, go back up to highs. It is a great reward to risk trade. Okay. I am more longer term. I think I could hold Bitcoin if it goes all the way back down to this level. I'm still willing to buy it. If it comes back down into this pocket or this pocket, I'm still willing to buy it. Okay, if it comes back to this level, I'm not going to love it, but I'm still willing to buy it. Because I think what we have on it is, yes, right now we're seeing a lot of financial engineering that are just selling calls on Bitcoin because the premium is so freaking good. But I don't think we're coming back to 75. I think that would be changing the entire integrity of the market if we're doing that. Okay, so a pullback is fine. A pullback is normal. But is affecting, proxies like MicroStrategy in a big way. Bitcoin's down 9% and MicroStrategy is down 26%. What the heck? Well, it doesn't really matter because I'm selling calls at 310. I'm selling calls at 320. I'm selling calls at 305. I'm just still selling calls. Hopefully the premiums are good. I can keep lowering my cost basis. My break even is 254, 252, 265, right? 269, 263, 5. I mean, I've got like profit. I just have to keep generating income and keep selling calls. If this is going to bounce, by the way, if we bounce off the 200 moving average, there's a pretty good support structure here. If it bounces and makes a higher low and we go back up, I have a trade also that if we're greater than 390 by January, it pays me 11. I think it pays me 1170, and 330 was my max risk. So, I mean, my risk is 330, but I can make 1170, and that's if price is greater than 390. So, about a 400% gain if I'm right. I'm going to look to manage that later in the year. It's December, January. I'm hoping that Bitcoin is back up to all-time highs by the end of the year. Okay. Lee says, quiet time of the year for gold. Curious what the Fed meeting minutes. I mean, that's tomorrow. Then we have Jackson Hole Thursday, Friday. We'll see. Meeting minutes tomorrow at 2 p.m. I only trade gold because it's very volatile. Well, hopefully you trade gold well then. I mean, I only traded euro dollar for the first year of my FOREX trading. That was the first year. And then I expanded. So I don't know. I mean, you can do everything right. You can trade one instrument, you know it well, and maybe it works. It's certainly simple, but it's all about your risk management, your trading plan. Okay. What else? Ethereum at 4161. We didn't get to all-time highs. We're very close, just shy of those all-time highs. But I was watching this wave structure. 1, 2, 3, 4, 5. I mean, we hit a fifth wave right here. So if that was our fifth wave move, like perfectly to completion, it's probably going to see like an A, B, C, or 1, 2, 3 correction. So this is either a sideways move like this, then we could have another burst on Ethereum coming, where we break all-time highs, and this gets pretty exciting. But if we have some risk off or the markets are rolling over a little bit, Ethereum's not going all-time highs. If the SPYs are down, if S&P is down, NASDAQ's down, this will roll over, right? And where does it come back to? Probably this level, but this wave structure is still in check. Find it there and then work our way higher. That to me is a good spot for stop losses. That's a good spot for profit. Go back to the highs again. Asymmetry, more reward than risk. Not a bad trade. Okay, what else? Japanese yen, nothing. Let's check some other markets here. DAX, just off of all-time highs in Germany. FEZ, that is the Euro stock. I'm long put, or I'm short puts in that one. FTSE in the UK just off the all-time highs. Argentina, I'm going to stay out of that for a sec. China made all-time highs last week, giving back some. Brazil and Latin America still kind of hanging on to like a buy zone posture. These, as far as like value trades in emerging markets, I think have lots of upside. They're like still dirt cheap, and there's lots of upside. It's going to have to be like a commodity boom, I think, to see like Brazil and Latin America take off. Mags led by big tech today. Nvidia leading the way. This is down 1.6%. Nvidia is down like 3-4%. So it's rolling over a little bit. Again, similar to the other indexes, we've had this ridiculous run. Okay, there's a simple fib from the April low. Okay, so where's this line up? Well, we have a 23% pullback here. We have a 30% pullback here. We have a 38% pullback here. If mags can roll over and offer that type of correction, well, there's a chance to buy a dip and go back to the highs again. But see if we can patiently get some dips on mags, right? And honestly, like I don't even think I'm going to. I don't even think I'm going to buy dips in here. I think what I'm going to do is, if this comes down here, how far lower can I go to sell puts and give myself a nice big room for error and just take on some income with out of money puts. Okay. Apple still hanging in there. Amazon filled the earnings gap. AVGO off of the all-time highs a little bit. Again, look at all these stocks. Like the biggest weekly move in Apple since 2020. Amazon, kind of an overshot with earnings, but filled it right away. AVGO, super overbought conditions. Pullback is likely just like NVIDIA. So take a low, take a high, watch your levels. Pull back to 23%, pullback. I'm telling you, like a pullback to the 23% or the pullback to the 30% is likely going to met with some support, and this market finds support and then finds a way to go right back up to the highs, right? We might consolidate here a little bit, but even this trade, if you can position for this, time it for maybe 30 to 60 days, the market probably gets out of its way and probably goes back up to retest highs. We come into all this potential dynamic support as well. All this dynamic support. We've got the 50, the 100, the 144, the 200. Anything that bounces in here can work its way back up. It's not a bad trade. Google, just shy of the all-time highs. Meta starting to fall a little bit. Lots of dynamic support. I could put the same thing here for these fibs. Take the low from April, put it up to the recent high, and expect to see a pullback. If it pulls back to 23, 30, 38%, maybe it pulls back to equilibrium. Good spots to be looking to get long with some defined risk trades. Not bad. A dip would be good. A dip is healthy. We should get one. It is exhausting to have to buy things at all-time highs and think like that's the best way to trade. Because at some point you buy the highs and you're a bag holder and it sucks. So I like to buy dips. I like to sell options at pullbacks. Microsoft is now like 7 or 8% off the recent earnings gap. It's down about 8.5%. Drag the fib up to the highs. We're hitting some of these 23, 30, 38% pullback zones. It's okay. Previous all-time highs way back here. 50% equilibrium back in here. If Microsoft offered a high, low, lower, high, lower, low, you find some support. There's some great trades on Microsoft. If I can construct a trade in such a way I can pull in income and keep my stop area, my risk below the April lows, I'm going to do that. I don't want to buy Microsoft at $500. I want to buy the thing at $340, So I'm going to watch and see if we get these decent pullbacks. All right. I see your question there, WD. I'll answer it. TLT I'll get to in a second. Netflix down a little bit today. I'd still like to see a better pullback. If we go high, low, lower, high, lower, low, 200 support, this is support. This is support. I mean, I think that's a great spot to get defined risk long on Netflix. Pull back from 1,300 down to 1,000, get a chance to buy a nice dip. NVIDIA rolling over, again, pretty simple fib, 23, 30, 38%. We have earnings next week. We have Jackson Hole this week. We'll see what happens. I'll pull back to the 50% or the 50-day moving average, or 50 period moving average. I love it. I've only been talking about it for weeks. It's like if it happens, it happens. Be ready to deploy some capital. I will be. I'm going to be putting in some positions. I've got like almost 50% cash in my portfolio to deploy. I'm just going to be selling some premium. If you're holding Meta, would you set up a collar trade? Well, the question, Patrick, is where are you holding Meta? Do you have over 100 shares of Meta? Yes or no? If you have over 100 shares, I mean, look, if you have over 100 shares of anything and you're worried about the downside, you should always have a put in, or you should always have a collar in, right? The collar trade is you sell a call, you buy a put, you're protected to the downside, and then you can also manage your upside by generating some premium, getting it called away. I mean, if I was owning shares now and I'm stuck at the tops, I mean, I would absolutely have long puts in. And a collar trade is what helps you kind of finance that trade, right? So an example would be like, this is just totally hypothetical. If I bought shares of Meta right now at $750, the first thing I would do is I'd buy the shares at $750 and let's go out, let's say to the October 17th expiration. Okay. If I sell a call at $750, that means I can buy a put here, right? I could sell a call at $750, buy a put at $745, protect the downside, and I'm still going to lower my cost basis from $750 down to $743, right? About $743, $742 and change, and also have the put to act as a hedge. So if Meta drops a lot, if Meta drops to like, $675, if it drops to $700, I could turn this trade from a $29 debit into maybe a $40, $45, $50 credit and help me then, lower my cost basis even further. So, I mean, if you're worried about the downside ever, you should consider buying a put, adding more options to lower your downside risk or at least protect some downside risk. Or the collar trade is one of my favorites because you essentially can finance a hedge, right? If we do a collar trade, yes, I'm giving up upside, but I'm getting $700 in income, right? If it stays above 750, I'm making $740 in this trade. If it goes down, I could maybe lower my cost basis by another $20, $30, $40, which wouldn't be all bad either. Okay. So it doesn't feel bad to have some downside protection. That is for sure. Just make sure you track that stuff in your spreadsheets or track it on a piece of paper where you know exactly what I paid for it, what my options are, and you can manage your debits and credits so you know exactly your break even. Okay, Microsoft down, like I said, about 8.5%. Netflix, I'd like to see it pull back to the 144-200. NVIDIA is down. I think we have more room to fall into this 23-30% zone, maybe retesting all-time highs. Tesla, barely budging actually. Considering the other, Mag 7 stocks are down, Tesla's not really moving much, which is kind of encouraging. Berkshire Hathaway, maybe a good trade. I'm going to be interested to see, like, if the markets go down, does Berkshire finally catch a bit of a bid? I mean, it's surprising that Berkshire was down as bad as it was. This has been one of the worst times that we've been below the 200 moving average. Last time we were below the 200 moving average was literally the bear market of 2022. So if we can put in a bottoming pattern here on Berkshire, this is probably a good looking trade to go back up to highs. But again, it's like, what's the general consensus of the market? I think the market goes higher, Berkshire probably benefits. They have a crazy cash position. They bought UNH, which is essentially at the low. From I don't even know if they bought it. Maybe they bought it at 260, 270, who knows? But it was a pretty good headline for the day. Let's talk bonds. Bonds at 86.68. We have a 200 moving average around 88. I'm still working a diagonal spread that I'm trying to get called away at 89. Fed funds rate, we've got the September 17th FOMC. The market's expecting at least a 25 basis points cut. I read an interesting article today that showed even if we have another Fed chair after Powell, the market is not necessarily pricing in more aggressive, more dovish behavior. It's pretty much consistent, like 25 basis points cuts over the next, year and a half. And the Fed funds rate's looking to be like low threes by the end of 2026. So even with all the drama with Trump and Powell, the market's still anticipating about the same amount of cuts going into the end of 2026. Okay. Futures market, I mean, everything's kind of down today. So we got bonds up slightly, Aussie down, Euro down, pound down, palladium, platinum down, corn down, soybeans down, wheat down. Cocoa is up barely. Platinum down 2%. Commodities down a little bit. Commodities down here 0.7. LQD, that's like a credit spread thing with AAA, triple B, triple C's. China down on the day, not a lot. Dividend and growth, actually swap dividend up 0.62. That's interesting, kind of like a little outlier move this for today. Let's go market breadth. Stocks in the S&P above the 50-day moving average about 58%. Stocks on the S&P above the 200-day moving average about 60%. We're still in a decent, reasonable bull market. decent, right? A lot of stocks above the 200-day and a lot of stocks above the 50-day. That's a pretty strong crossover to have. Netflix, NASDAQ, 50% of stocks are above the 50-day, which means that we're getting maybe that like it's the line in the sand on the NASDAQ, right? If we go below this, it's like stocks are kind of crossing over into the near-term sells. Meanwhile, we've got 63% above the 200. So maybe a bit of the pullback in the tech space, right? Maybe some rotation out of tech and going elsewhere. Costco, Walmart, still adding covered calls. Nike, still doing pretty well. I've got some naked puts and ratio spreads. Home Depot had good earnings today. Still not even a stock I want to touch. I would say if I'm going to buy it, it's going to be way down here at 300 or way the heck down here at 280. Lowe's also has earnings this week. We'll see what happens. It's a nice trend line break though. I mean, really strong support back here around 180. I'm just not getting the opportunities that I want to add premium. MasterCard right back up near all-time highs. Visa down a little bit. Amex also down. That's interesting. MasterCard is up to all-time highs. Visa not. Amex not. Interesting divergence between those three. Johnson & Johnson has been just on a rip. I've got some naked puts here. Let me check on those. J&J. Right now, J&J is up about $4,000. So I've got some bull put spreads and some naked puts. Not bad. I mean, this naked put, it's up $600 out of a max 730. This one's out to, I don't know, this is probably worth taking profit. I'm up 83%. I'll probably just let this one sit on the weekend. This has been a pretty good rotation into healthcare, in all honesty. Healthcare's beat up. You get a big spike in UNH. Johnson & Johnson's performing well. It'd be nice to see Pfizer play catch up in that space as well. Pfizer's up to 25. If Pfizer gets up to $30, I'm probably taking some profit on some of my shares. PGR, this is insurance. I've got a ratio spread here. I think it's down to the 210s. Let me check on PGR. PGR, yep, 220s and 210s, 215s, 210s, 200s, 190 or 195s, 190s. So I need price to stay above basically 220. We're trading at lows at 239, back up to 250. If we get back above this 200-day moving average, maybe this is the correction. We kind of trough out here, and then progressive starts inching higher. Fundamentally, it's pretty darn strong. Insurance is just continuing to go up higher for everybody. So anyway, that's that. For the rest of the day, we're only like 9 minutes for the close. I'm going to go ahead and cancel some of those pending orders. I don't want to get filled with the close and have nothing to show for it. So it's just right there the whole time. I'm going to cancel this trade. I hate it because if it were to like fill me and then rip up to like 610, that would be an awesome win. But I don't think I'm going to get filled. Dastardly. What's this? All calls. That trade's in for waterfall income. That trade's not going to fill. I will cancel. This trade, not going to fill. Let's let that expire today. This trade's not going to fill. These trades pending. Okay, so it's really kind of all or nothing on this final trade here. That break even would be 64.0670. I'm already taking. I'm just gonna get out. I'm just gonna cancel it. All right. Looks like I'm gonna eat a second trade loss today on daily profit play. I'll be down in net like 370 on the day. Survive it. We'll trade it. We'll be back in profit probably by the end of the week. So frustrating, but it is what it is. Market's just kind of hang out at the lows today, which is stupid. If we have 7 minutes and this thing just rips, maybe we get lucky, but unlikely. So surprise me, market. Go up. I don't know, 12 points. Reduce some of my risk. I doubt it. We're probably going to hang out at like 6405 to 6400, and I'll just eat the 370. Okay, what else? Where did I leave off? Chubb, Palantir, down a ton. Was anybody surprised here? I mean, for crying out loud, man, Palantir's been a freaking ridiculous move since this low in April. take this low, take this high. This thing's up 180%. You got to be kidding me. So just take a low, take a high. The market is pulling back to find some balance. So maybe some profit taking, right? 30%, 38%, 50%. Probably going to deal with a lot of volatility, but where could you buy this thing? 100, 144, 200 moving average. I like those trades. I might not just buy it outright. I might just sell puts, right? I might just sell puts. So I will see. The IV is going up on Palantir. I'm curious how far out of the money I can go, but I'm certainly not interested in being a bag holder here. IV's up to 26. It's not that high, actually. So maybe we get some deeper corrections. If we pull back to like the 130 zone, I might try to sell some April premium around like 70 to 60 bucks. I'm not going to be left on a stock that it's up 185%. It can certainly pull back 30, 40, 50% of that. So just be careful. I'm not interested in buying Palantir at 190. It's already like 1,000 price to earnings. All right, what else? HIMS, same thing. Lots of volatility here, lots of back and forth. I think I have some exposure on both. I've got Palantir and HIMS. HIMS was in profit, is in profit. HIMS is here, 27 by 25. It's up $6,500. Cool. Chance of profit in this is about 86%. Palantir, I have about a 98% chance of profit. I'm up $7,500. Chance of profit in this thing, again, 98%. I'm just staying out of the way. If I can sell more premium, I'll sell more premium. Not too bad. Carvana, man. If anything, I want to short this. CRM, this is Salesforce. Pretty big support here. If it holds these lows, this isn't a stock that I necessarily want to own, unless they start getting more in like the AI space. But why is the stock down so aggressively from that high to low? This thing's down, 38%. I don't know. That's a big maybe. It's pretty expensive. I don't know if I want to own Salesforce. O'Reilly, I cannot believe the stock keeps making all-time highs. We actually missed earnings, and it's like, go up. Cars more expensive, labor more expensive, inflation, they're benefiting. I don't even know. Apparently, I have no plans to close brick and mortars. I don't know. I guess I want to own a franchise. O'Reilly Auto Parts is the way to do it. But crazy, man. I was talking about shorting this thing when it split. This is like a 15-to-1 split. We had a little bit of a correction, but literally it just fell right back into dynamic support and then ripped to the upside. We tried to trade this in my pinch point scanner. This was such a good setup, but the spreads were awful. It was just a terrible, like the strikes were so bad. Zillow, nice little rip on Zillow. Not bad. Uber, retesting all-time highs. Lyft, all right. Lyft is getting up there. I've got some shares around 11.79, break even at 12, looking a little bit better now. Kind of caught its support levels. I do own some shares of Lyft right here, up about $5,600. I don't have anything covered. I do have a chart alarm back up around $18. I don't mind just taking profit. Like not now, but if we get up to like 18, 19, 20 bucks, I'm going to take some profit. This yellow box is also a massive gap. So if Lyft can get its groove on to the upside, 20 to 22 would be a pretty good profit target for me. Own the shares at 12, take $8 a shares, or $8 a share at 1,500 shares is not bad. So let's see if Lyft can kind of ride the coattails of Uber. Come on, baby, 6410. Let's go. Sectors were good. Currency-wise, let's go currency strength. And then I'll let you go here the final 3 minutes. Japanese yen strong, Aussie CAD New Zealand weak. 50-50 on the vertical axis here. So we got dollar, Swiss, and yen, a little bit of risk-off trading reflected in the markets today. Risk appetite currencies, especially Aussie, New Zealand down. Volatility a little bit stretched, but not like crazy high volatility. Nothing fancy. Let's talk currencies. I released this for my Pulver alerts. I'm still long Aussie CAD. I'm still long Aussie Swiss. No trade in Aussie yen. I'm still long Aussie New Zealand. They have a rate decision tonight. They're expected to cut. RBNZ looking to cut rates by 25 basis points. Aussie dollar. I think Aussie dollar can get up to like 68.50 to 69. You just got to be willing to buy small in this chop. If you're buying small, it dips lower. You can buy small, buy small, buy small. Stop loss below. I think this open space can get us up to like 68.50. So I do like the trade. It's really just how bearish are you on the dollar. If you trade it small, I think the trade's good. CAD Swiss, I'd love to see a bullish pattern and a break of this trend line. It's just going to take some time. CAD yen, nothing. Swiss yen, dollar yen, probably my two favorite yen crosses right now to watch. There's no setup yet, but man, I'm watching closely because if we go high, low, pause, break, retest, if we get this level here, I'm going to sell, stop loss above, and go after that, baby. I'd love to see the Swiss yen give us that trade. So it'd be a low risk, high reward. It's one of my favorite setups right now in currencies. I just need to see if it'll break the trend line, give us more confirmation. Okay. And that does make me mad on that 64.10 by 64.05 credit spread because I was looking at $3 and change and I'd be up $3 and change. We're at 64.11. Can we make this miraculous run up here for these final minutes? Probably not. I'm probably not going to get a 9-point move, but maybe 3 or 4. Settled at 13. You piece of shit. All right. So I took a full loss on that second daily profit play. We're at 6411.80. Damn it, man. That would have been a nice 3 to 350 if I took that trade. I just didn't like the fill at 64.05, thinking that if we closed at 6400, I still would have lost, 100 and some bucks. But that's what was required. I didn't take the trade. So daily profit play, we had 1 winner, 1 loser today. Very manageable. I kept it 5 wide. It's a Tuesday. Tuesdays are not my favorite days to trade. And it was reflected in the fact that price was directional today. But it's all right. We survive and move on. We'll come back and do it again tomorrow. Euro CAD, no trade. Euro Swiss, I'm still long. Euro Pound, no trade. Euro Yen, maybe watch your Swiss Yen for the Euro Yen to do the same thing. Maybe something like this resistance-wise. Maybe it rolls up a little bit higher, sets up a topping pattern, rolls on the right-hand side of the trend line. Here's what I would say about the Japanese yen. If I'm right on these trades and this goes this way, that's not a good sign for the market. If we see like a monster deleveraging on the yen crosses, that's not a good sign for the market. So as much as I like these trades, you don't really want to see a strong Japanese yen. If it happens, well, there's ways to make money on it. It's just make sure you've got some downside hedge risk on your portfolio. Euro New Zealand, no trade. Euro dollar, I'd like to buy this thing at like 113, 112, 111, 110. I think we get back to 118. So I'm going to try to buy Euro dollar lower. Pound Aussie, nothing. Pound CAD, nothing. Maybe a range up here. Just be careful. Pound Swiss, I bought the lows at 107. Pound yen, no trade. Unless it's obvious, unless we have like a price pattern to trade. Yeah, I do. Adrian says, I thought you hated the yen pairs. I do. I really hate the yen pairs. However, when it's a good setup, I'm going to take a trade. So if I put in half of 1% in a swing trade or 1%, that could potentially pay. I mean, no joke. I'm talking like I could risk maybe 200 to 300 pips on a dollar yen trade that pays 2,000 to 4,000 pips of profit. I'll take that trade. It's like I'm going to take that trade, but I will patiently wait for confirmation. And if I'm going to take a trade, I've got to have a stop loss, which is annoying in trading the yen crosses, but you don't want to be the wrong side of those moves. Pound dollar, if I get a dip back to 3,000, I would buy that dip at 3,000. New Zealand CAD, any dips on New Zealand CAD, I'm trying to buy it, even though we have the rate decision. New Zealand Swiss, I'm still long. We might have a double bottom equal low here around 46.50. If we have some type of a surprise move where the rate cut happens and the market rips up there, or they surprise and they don't cut rates and they pause, maybe New Zealand gets really strong all of a sudden. And maybe we have some symmetry here to play with on New Zealand Swiss. Maybe. New Zealand yen, meh. Let me check something on the day. Market makers at 22 points. I don't think they did their job today. That market was 37. So almost a double in market maker expectations today. That was disappointing. So it is what it is, man. All right. New Zealand yen, we're good. New Zealand dollar. Similar to Aussie dollar. I actually like the Aussie dollar trade better. Dollar CAD. I don't know. I like buying lows and lows and lows. If we get some dips and pullbacks, I'll stay long dollar CAD. That's about it. Bigger areas. Dollar Swiss. Maybe a little wedge on the right-hand side of the trend line. Something like that. Little sideways consolidation. Get a little push to the upside. Maybe break this high, pull back higher low. Push to symmetry. That's the pocket I'm trading for. I'd like to trade 87, 88 for profit. My break-even is like 84. So I'd like to get out of that trade. Richard, you did. Good trade. Did you fill at $4? When did you fill at $4? because I canceled that trade, man. Canceled. I canceled that $4 trade at 352. I don't think there is. Oh man, let me go to the 1 minute chart. I don't think there's any way I would have been filled with that trade. If I went down to the 1 minute at 352 and I canceled it, that's 54. Ah, son of a B. That might have filled. So I canceled it at 352. It looks like maybe at 354 this would have filled, and there's your rip to the upside. So that was what I wanted to see, was get filled at $4. It actually could have cash settled for a full $4 credit. That's the crazy part. Get filled at $4. It closed up above 64.10. That would have been a full $4 credit. That would have wiped out my entire risk on the day. I would have finished the day net positive. Yep. So anyway, good stuff, man. I'm glad you got filled. I'm a little miffed that I canceled it, but I just would have been annoyed had we been filled at $4 only to see price stay at 6,400 for the rest of the day, and I just waste $100. So, what are you gonna do about it? Good stuff. Good stuff. Good stuff. All right, I think that's gonna do it. We've done all the currency pairs. Here's dollar Swiss. Here's dollar yen. I like the setup. It's just a matter of getting better confirmation. This is the big pattern trade I'm talking about. Dollar yen, if it gives us this trade right here. So we either spend all this time choppy. This might have to involve some type of deleveraging, some type of carry trade unwinding. I wonder about the timing when the Fed starts cutting rates. We are sitting on a currency world that the Japanese yen is raising rates to 0.5, right? The dollar is going to start cutting and cutting more. Does that make the carry trade less attractive? If it does, I'm telling you, like, this trade down to 140, this trade down to 120 might be a crazy move, but could be very, very lucrative. So I'm watching. I think 2 ways I would trade it would be either currencies and FOREX or Japanese yen futures. Okay. All right. So I'll let you go on the day. Adrian, do you end up pulling a win out of your dollar yen? Because looking at the currency strength for the day, it looks like your dollar yen did what you needed. So by about 10 a.m., this thing started to go your way. Hopefully got you some profit. Yeah. All right. Okay, cool. I'll let you go for the remainder of the day. I'm trying to think here. Tomorrow, daily profit play in the morning, daily profit plan at 9 a.m. Eastern time. Okay. All are welcome. This is a free trading session every single day. You're all welcome to join me. Okay, room's filling up nicely. We're having some fun. We're making some good trades. I will do that again tomorrow. Tomorrow's going to be Watch This Wednesday. I'll sprinkle in my pinch point scanner. We'll take a look and see what's moving and shaking there. We have FOMC minutes in the afternoon. We have Jackson Hole starting Thursday, Friday. Trying to think what else. I'll continue my Waterfall Income Masterclass series tomorrow afternoon at 1:30. We had a great class today. We'll continue that for day 2 and 3. Pinch point, like I said, tomorrow to take a look at my top stocks. Options edge, just managing. Yeah, just come back and join me tomorrow morning. Okay, sounds good. All right, I'll see you tomorrow morning. Be there, be square, 9 a.m. Eastern time, daily profit plan. Come into my Telegram. You can follow me on Telegram. I'll post a link. You can also opt in for, I've got an SMS link if you want to opt in there. But Telegram has a link to join me on Zoom. I also push this stream on youtube.com/financial wars every day at 9 a.m. So here's my Telegram here. So this is daily profit plan live session, 9 a.m. Eastern time. Telegram, go. Telegram, go. There we go. Chris Pulver, Telegram. There we go. And one more link to share. you go. Also, if anybody's interested in my course of services alerts, I've got a website now. Easy to find me, chrispulvertrading.com. There's some information on some of my services down here. Daily profit play, double ups, news breakers. I run my pinch point scanner. I run my crash course masterclass. I run waterfall income. Again, learn more, check it out. I think this takes you to like a buying page. I'm trying to get like an on-demand webinar for this. I mean, I can always sign you up for that if you're interested. If you want to join my free daily profit room, just come in here for daily profit room, click on it, and you can join me here every day, 9 a.m. Just sign up. So Macro Mondays, tomorrow's going to be Watch List Wednesday. Cool. All right. And we stream youtube.com/financial wars. I push these final hour sessions on youtube.com/Chris Pulver, as well as Financial Wars. I'm on Twitter at Real Chris Pulver, on Facebook, on Telegram. You can find me. You can find me in the markets. Unfortunately, today was not a winning day, but that's okay. Certainly was a risk management day. Could have been better. I would have carved out a little bit of a flat day had I been filled at that $4 entry like I wanted. Looks like I missed it by about 2 minutes, and it is what it is. But tomorrow's a new day. Let's see if we just do our thing, grind, and have a good day. Okay. Good stuff. Okay. I will see you tomorrow morning. See you tomorrow morning at 9 a.m. Take care. Bye.